Good afternoon, everyone. Welcome to the 2024 Annual Meetings Governor Talks. Today we are delighted, extremely delighted to have Governor Ueda from the Bank of Japan. Now, Governor Ueda doesn't need any introduction. He has one of the most important jobs in the world. So with that, Governor, if you could start us off with how you see the state of inflation and the monetary policy stance of the Bank of Japan to kick us off.
So I'm just going to summarize what we have done so far this year and why we made those policy changes. I feel like it was a long time ago, but in March this year, we ended the so-called large-scale easing, which consisted of, again, so-called QQE and YCC. And we set the policy rate to be at 0 to 0.1%. Previously, it was in negative territory. And then in July, we raised the policy rate to around 25 basis points. We also decided on the plan to, and announced the plan to reduce JGB purchases, which is effectively our version of QT. Now, why have we done this? The reason has been the movements in inflation. Now, if you look at headline inflation, it's been behaving like it did in other countries. So headline inflation rose sharply in 2022, reached a peak of, I think, 4.2% early last year, and then has been decelerating since then, but has moved between 2 and 3%. So headline inflation has been above 2% for almost more than 2.5 years. But we still maintain fairly easy monetary policy stance in the sense that 25 basis points fairly low level in nominal terms, and also real interest rate is very low. Why are we doing this? In foreign economies, where they have experienced more or less the same inflation dynamic, central banks raised interest rates fairly aggressively in 2022 and 23. The reason, of course, was even before the rise in inflation this time around, inflation was around 2%. Inflation expectations were also around 2%. So they wanted to avoid inflation going up any further. In our case, although headline inflation, as I said, was above 4% at one point, if you look at something like underlying inflation expectations, they were around 0 before the rise in inflation in 22. So we wanted to use this opportunity to raise inflation expectations, underlying inflation, and move to a new equilibrium with 2% inflation in a sustainable way. That's why we maintain policy easy, and it is still easy, as I said before. Now, where are we in our attempt to raise underlying inflation? As I said, it was around 0 before 2022. It's been rising since then slowly, thanks to first global inflation of especially food and energy, which has spilled over to domestic prices, and then easy monetary policy. And finally, there has been the effect of labor shortages affecting wages positively. So underlying inflation has been rising slowly. And this was the basis for the rate decisions we made twice this year. In March, we thought underlying inflation, although it was still below 2% was above a certain number, so we decided to take away a large-scale easing. After that, data came out, data continued to come out okay. I mean, wages, prices, and to some extent consumption, so we raised rates again in July. That's where we are at the moment.
Thank you, Governor. So as you said, it's not been that long before when you started, you got rid of the yield curve control and quantitative easing. Now it's been about 6 months. What are some of the lessons you've learned in this normalization process?
So we're just a couple of steps into normalizing policy, and I think it's too early to draw any solid lessons from our experience. But I can say that the way we approached normalization, which is first we made YCC more flexible and in a gradual way, and then touched the rest of the easing, was successful. Although in a sense we were lucky to have been able to do so. The lucky part came from the very slow pace with which underlying inflation went up. Well, if I could talk about a lesson from our experience is if you have inflation or inflation expectations entrenched at around zero, it's very hard to change them. Actually, as I've been saying, they've started to change, but as a result of a long period of 0 to negative inflation, inflation expectations have been changing very, very slowly. And that was, in a sense, lucky for us in our attempt to normalize policy, although it's still taking time for us to get to 2% inflation in a sustainable manner.
So, many of the central banks recently have cited high uncertainty as a factor in their recent policy decisions. How has uncertainty and the volatility which comes along with that affected the BOJ's decision making?
Well, I must say uncertainties are everywhere, at any time. But when there's huge uncertainty, you usually want to proceed cautiously and gradually. But the problem here is if you proceed very, very gradually and create the expectation in a normalization process, create the expectation that rates are going to stay at low levels for very long period, this could lead to a buildup of huge speculative positions, which could become a problem later. So I guess we need to strike a balance between the two.
And in this context, how has communication of central banks played a role? And this has been an issue for many central banks, including advanced and emerging market economies. But given the uncertainty, given how that's played a role in your decision making, how has communication been a factor and in how you explain your decision of markets?
So I have to say that we can't telegraph all our future moves ex ante.
Right.
What we can do is to explain carefully what our economic and inflation outlook is, and explain the basic monetary policy strategy again carefully.
So you've not seen communication to be such an issue in this context of uncertainty much?
Well, if you ask me what we would have done differently before say August, I could say that there was a period in July where there were no communication, explicit or formal communication between board members and the market or the media. So even though we may have said the same thing as we were saying in June, it would have been nice if we spoke a little more in July.
Okay.
That I can say.
Okay. Now, we are at a time where Japan has started hiking interest rates at a time when both the Fed and ECB and others have started easing, including central banks in Asia. Does this divergence factor into the Bank of Japan's decision making?
Oh yes, in principle or theoretically, under flexible exchange rates, one country's monetary policy can diverge from that of others, but there are sometimes significant effects of, say, monetary policy changes in other countries on our economy and inflation. So we look at what happens in, say, the US or Europe, or their monetary policy very carefully in forming our economic and inflation outlook.
But at the end of the day, it's what's happening in Japan which is driving all the decision making.
Oh yes,
right?
yes.
Totally.
Yes.
Now, Governor, moving from these very specific monetary policy questions, demographics has long been, at least many people have talked about demographics playing a big role in Japan's deflation experience. Now, in Asia, you have more and more countries facing rapidly aging population. What can we learn from Japan's experience?
So if I could talk about our experience, back in the 1990s and early 2000s, when we started worrying about declining population, I think it affected at least aggregate demand, the aggregate demand side of the economy in a couple of ways. First, people started to worry about the sustainability of the fiscal situation or the sustainability of social security, which probably affected households' confidence negatively, may have affected consumption to a certain extent negatively. Also, something like the expected rate of profit was affected negatively because there's fewer people to sell goods to domestically. As a result, many companies try to move production sites abroad, which affected aggregate demand negatively. But now, labor supply is shrinking in real time. So there's a serious excess demand for labor in the market or in the economy, which is now pushing up, which is now a factor for creating increases in wages, and to some extent it's been inflationary. So these three probably are some of the main channels through which population growth has affected our economy.
Right. And would you say any particular lessons for countries in the region? I mean, we have China and Korea also facing rapidly aging population. We also have some countries which have young population. So, what could they take from the Japan experience?
I don't know. It depends on the situation of the country, but as far as China goes, maybe already the first two of the three effects I mentioned have started to take place.
Okay.
To a certain degree.
Thank you. One question, since the pandemic, central bankers have been rethinking their models of the economy. Basically, many of them have been rethinking the models about what determines, factors at play. What can Japan teach the world about how to set and communicate monetary policy in times of big structural shifts?
I think it depends on what the structural change is, but in abstract terms, I'm sorry I don't have a very good answer here, but we should study carefully, let's say this is a supply shock, whether it's temporary, or even if it's temporary, how long lasting, the effect of that is on inflation and output, and whether or not we would like to see it's going to affect inflation expectations. And from there, you have to make clear what your monetary policy strategy is, whether you are going to adopt the so-called look-through strategy, or whether you want to compromise on your inflation target temporarily. These things you would like to make clear to the public to have good communication with the public.
Okay, thank you. Now Governor, you've been an academic for a very long time before you joined first Monetary Board of the Bank of Japan, and now as a governor. Compared to that, now you have a very stressful job. What keeps you awake at night?
Let's see. To answer in a very theoretical way, I think about what would be the right size of normalization in total going forward, and how best to allocate that total rate hikes across time optimally.
That's the only one?
That keeps me awake 24/7.
Now, if you were to go from non-theoretical to more practical stuff, what's happening in the world economy, what would be bothering you?
We've been, for the last couple of months, worried about what might happen to the US economy going forward. Employment data have been moving around, so we're yet to determine what the medium-term trend is.
So what happens to the rest of the advanced economy? Governor, thank you so much. At this point in time, I'm going to open up the floor for a few questions. Can you introduce yourself before you ask the question, please?
Hi, my name is Masaki Yoshimori, Georgetown University. I go to for a public school. So my question is, the BOJ article outlines the corporate to the government. However, with political pressure, how do you plan to maintain the independence of monetary policy while navigate the scenario for the future normalization? And Janet Yellen said, Secretary Yellen said, point out to that difference interstate to deflect to exchange rate. What do you think? Do you have a message to leverage carrier trade in the current situation? Thank you.
Thank you. I'll take a few questions.
Hi. Joseph Thorpe, Fixed Income Portfolio Manager for Bailey Gifford. You said that one of the things that keeps you up at night is the right size of normalization going forward. Could you just give us a bit more detail as to what you think that might be?
Okay, we'll take one more and then we'll... can we...
Hello. Jay Kansara with the Asian Pacific American Islander Public Affairs Association. I have a question. Given the importance of the Quad in all four countries in their foreign policy postures, is there an effort to also coordinate banking postures of these four countries to address economic concerns collectively?
Thank you. Governor, you want to take these three questions and then we can get to some more questions?
What exactly was the third question?
On the Quad.
Yes.
Can you just repeat the question, please, on the...
As all four nations, particularly in the foreign policy posture, they're coordinating their meeting. Is there much coordination amongst the central banks of each country to address economic concerns and these macroeconomic conditions collectively?
Thank you.
So if I... Now, with regard to the first question, which was about central bank independence, I can say briefly that whatever the positions of politicians with respect to monetary policy, we will try to set monetary policy in an appropriate way. On the second question about the size of the policy rate adjustment going forward, it actually boils down to the question of, theoretically speaking, where the natural rate of interest or the neutral level of interest rate is. As I have said repeatedly, we have a number of estimates on this question, or on the level of the natural rate of interest. But the range of estimates is very wide, like in real terms, -1% to plus 0.5% or so. And if I could add more, each of these 5 or 6 estimates comes with some confidence intervals. So there's a huge range there. And if you think about that, it's very hard to pin down the appropriate size of the rate hikes from here on. Now, on the third question, yes, we central banks get together very periodically. For example, we meet about 5 or 6 times in Basel, and what we do is essentially we exchange information about other economies, or information we have our own economy and learn about other economies. We do these things very, very seriously.
Thank you very much. One more round of questions. Yes, please.
Hi, I'm a researcher in entrepreneurship. One of your work is to build a good circulation between the wage and the price in the economy. And I think it was especially hard for those small and middle-sized enterprises. So what what special policy was built to help these small and middle-sized enterprises to do better in such circulation, maybe through innovation? Thank you.
Okay. Yes, please, at the back.
Thank you, Governor. Chris Crow from Capula. You were talking a lot. Talking a lot about underlying inflation. I just wondered if there is sort of a range of metrics that you track to understand the dynamics of underlying inflation, if there's any particular numbers that you focus on. Thank you.
Okay, one last question before we go back to the governor. Yes, the lady here.
Hi, thanks. I'm a student at Georgetown University in economics, undergraduate. I was wondering, with the unwinding or partial unwinding of the carry trade with the last inflation or interest rate increase, how do you expect to quantify the effect of future interest rate increases on the carry trade and to make further decisions based on that to mitigate those effects? Thank you.
So I have one and a half minutes.
Yes.
Okay, so we worry about what will happen to prices and wages of small firms, but we don't carry out policies specifically directed to these segments of the economy. They are done by the government. But I could say that wages of smaller companies are starting to rise as well. On the question of underlying inflation, yes, we don't have a very good proxy or measure of underlying inflation, but we look at variables like long-term inflation expectations, wages especially the rate of growth of base wages, to have some idea about where underlying inflation is. Let's see, what was the third question?
On carry trade and...
Oh, okay. So it's very hard to quantify the effects of monetary policy on what will happen on the volume of carry trade, but it's very important to make clear, as I was saying, what the basic monetary policy strategy of the BOJ is, which is going to contain excessive buildup of carry trade-like positions.
Thank you. We are out of time here. Thank you, Governor, for sharing your thoughts with us. A pleasure to have you here.
Thank you.